I'm Bambi Francisco, and I'm speaking with Howard Hartenbaum. He's a venture capitalist at August Capital, a leading venture firm here in Silicon Valley. Howard, we've talked a lot about what's happening with the venture capital industry, whether there's something wrong with it or it's doing just fine. You seem to think that maybe it's doing just fine.
Yeah, so the venture business has always been very cyclical, and we had really fantastic times during the late 90s, which was actually before when I joined. I joined in January of 2002. And then we went through a very bad time for many years, which for me worked great because I didn't find much competition. I was making investments in 2002, 2003, 2004 timeframe.
Were you here or were you in Eastern Europe?
I'm based in Western Europe, in Luxembourg.
Western Europe, okay.
And you know, it's really a great time to invest when times are tough because there's less investors, there's less competition from other companies, there's less money flowing around that's muddying the waters in the competitive space. And I think we're back into another down cycle. Well, we are definitely down in a down cycle right now. And for the venture community, that bodes well for the future, meaning 6 years from now, 8 years from now, hopefully not quite that long, maybe 4 years, 5 years, some of the companies that are getting funded now, even though it's a very scary time to invest money, will be very large, successful public companies that will justify the investments that are going in right now. So from a cyclical basis, I think this is normal. It's a little bit worse, but the whole economy is in a very bad situation right now. So you asked me a little bit about some of the problems with the venture industry, and I think that there's a lot of venture firms out there. It's a very exciting business to be in. You meet entrepreneurs. They're telling you their great ideas. They're building companies. You finance them. You know, they build product. They get customers. And it's really kind of a very exciting job to do. So a lot of people with operating experience look at this and say, wow, I've been a successful operator. And now I want to go and be a venture investor so I can apply my experience to helping these companies. And money was easier to raise. You know, kind of at the peak of 99, 2000, a lot of funds started to get going at that time.
Right.
And the way the industry works is you raise your money and then you put half of that money to work in investing over the next 3 to 4 years. And before you know what the results are going to be, you go out and you raise your next fund from your same investors. And then a few years later, you do it again. The amount of time it really takes to separate the successful investors from the less successful investors is, I think, unfortunately, a very long time period. And if you look backwards now for 10 years or so, there are good venture funds who made good money during that time period for their investors. They built great companies in that time period, and everybody's happy. But unfortunately, there was more VCs than there were great companies to be funded during that same time period. So there's a lot of people who joined the industry and who got funded who now are looking at their numbers, and their investors are looking at their numbers and saying, maybe we'll cut back.
So there are few funds that have made money, but the typical venture fund hasn't made money for its investors since 1996, or for some time.
Well, it depends on what you mean by typical. So there's 20, 30, 40 funds, I don't know the exact number, who have made money over that time period.
August Capital being one of them?
Some of them, yeah. August Capital, for example, every fund that they've done has made money thus far. And there's some funds who have made more money in total, but some of their funds have been negative and some have been extremely positive. So on average have been really fantastic investments. And there's some funds who haven't returned the capital that they've invested. And I would say the companies who, over the past 12 years or so, are negative and don't really have much prospect of returning that capital probably won't be around in a few years.
Now, new funding, in terms of the investments going into new startups or startups, I think it's inched up, not inched up, but it's been up from second quarter to first quarter and certainly from the third quarter, but not in the $7 billion quarterly range. And maybe it doesn't have to be there. I read somewhere that it should be, we shouldn't be investing $25 to $30 billion a year in these companies because there's just no way you can get that type of return. Should we be looking at $10 billion annually?
So I don't know what the numbers are. I know that There's great funds that are starting even during this time period. Andreessen Horowitz raised a new fund, and they're fantastic guys. And
you raised $650 million. August Capital did.
And there's many other funds. Matrix raised a new fund. I read Coastal Ventures raised a new fund.
$1 billion fund.
Yeah, so there's money to go after the funds who have had a performance track record over that time period, and even new funds like Andreessen Horowitz who are starting up because the founders of that fund are just fantastic. And so, like any business, there's new guys that come in who have potential, and there's other guys who kind of, disappear. And some of those firms take a long time. Look at General Motors. They've been in trouble for 20, 30 years.
Is there a generational, there's somebody from Sigma Partners who said that there's going to be a generational change where you see a lot of the established VC firms moving, and maybe these other firms, like Mark Andreessen's company coming in, Coastal Ventures is new. Are we seeing that shift to sort of new players, new powerhouses?
Well, Coastal Ventures, run by Vinod Khosla, he's not a new guy to the industry.
No, but it's a new.
So he may have formed a new entity and brought his experience and structure to that. And Mark Andreessen knows a lot about the venture business. He's, I'm sure, made lots of angel investments, and he's a very, very successful entrepreneur and operator. And there's different types of firms out there. There's those who are new, and there's those. August Capital is considerably more old school. We have, it's been around for a long time, and some of the senior partners there have been doing investing for 25 years. So there's just different types of firms who are focused on kind of different strategies for their business. And one thing I think is very interesting about the venture industry is that people kind of assume that all the VCs have the same strategy. And in fact, strategies are very, very different. Some firms invest very small amounts of money in a very large number of companies, or a modest amount of money in a large number of companies. And Sequoia does that, and they do it quite well. They have fantastic deal flow, and they pick a larger number of companies than many venture firms. If they publish their numbers, you would be surprised the number of deals that they had done.
That's not your model at all.
No, August Capital, we're at the other end of the spectrum, where the number of deals that we do is much less, and we take maybe more money into each deal over time, and we're a little bit more cautious in our process of picking companies. And both models work, even though that they're very different in how they're set up.
And just one question about, there's a lot of angel investors these days. And I don't know, maybe it's because I'm focused on this industry so much, but it just seems like there's a lot more individual investors, angel investors, putting their money to work. Is that changing the way at all how venture capitalists get involved with startups?
So I think there was more angel investors at the peak of the bubble in 2000, but many of them really didn't understand what the risk-reward profile was. And the number is less now, but the angels that we run across on a regular basis, you had to guess Aiden Senkit, for example, great guy. And he's very experienced, and he's had some good track record. He's a fantastic track record operationally, and now some great track record in investing, getting going. But he knows what he's doing. He understands the risks. It was not somebody who made a bunch of money at the peak of a bubble and just said, I'm going to take $500,000, chop it in 10 pieces, and invest it in 10 companies in the next 3 months. And there's a lot of more professional angels out right now. And they actually help their companies quite a bit. So,
I'm sorry, last question. I did ask this to someone at Foundation Capital, Charles Maldo. I asked him, is the venture industry going to look different in 5 years?
I think there's going to be quite a few less firms in 5 years. And the data I have behind that is talking with some of the larger limited partners. We did a fundraising this year, and many of them said that they were cutting back the amount of money and the number of funds that they were going to be putting investment into, and maybe in half or cutting back by a third or whatever. And if you're a fund and you have a large LP who's your anchor LP, maybe you have a $200 million fund and he's 40 million of it, there's a good chance he may just say, I'm not putting in any money next time around, and that may spook a lot of the other investors in that fund.
Okay.
So.
I lied. I do have one more question, and it's about the exit market. So is 2010 going to be a better year than 2000? Well, no, it's probably going to be a better year than 2009.
Probably, from what I hear, big LPs say that if they do a survey of their different investments in venture firms, there's tens of companies that are profitable, doing more than 50 million in revenue, who could go public in a more optimistic market. I think the Facebook going public will be a big pull on the market, because they'll get an incredibly aggressive valuation, everybody loves that product. They're a huge force in the industry, and people will look at that and say, maybe the number is 10 billion, maybe it's 20 billion, maybe it's 30 billion. The market will...
So we need another, like Google, when Google came out.
Well, Facebook is going to do something like that. It's going to pull a lot with it, and then once they go public, they'll now have a currency that allows them to start acquiring companies.
Right.
And I think it will be a great thing, and it will kind of jolt people back to, wow, you can put money in a startup company at a modest valuation, and it can go public for $20 billion, and that will get people excited.
Inspired and motivated again. The whole cycle start all over again.
Yeah.
All right. Well, we should all be rooting for Facebook to go public, though, right?
I'm sure it's coming soon.
Okay. Thanks, Howard.
Thanks.
I've been speaking with Howard Hartenbaum. I'm Bambi Francisco.